Recent rumors about Jack Ma's future in the Ant Group have been heating up the entire business world. Ant Group IPO, which was suspended in 2020, was once again held last year in favor of the Chinese government to cut off the wings of Jack Ma in the e-commerce sector. In today's video, we're going to examine Jack Ma's issue in great detail. Before we proceed, hit the subscribe button and smash the bell icon for more exciting updates.
Have both essentially suspended the listing this morning. Creditor, remember, it was once a part of Alibaba. Their Alipay system was developed there. That he had a meeting with regulators. He'd been somewhat critical of the regulatory.
Was that they said that that Ant Group had recently reported to China's securities regulator about the significant changes in the regulatory environment, and that this major development, the exchange said, might make Ant Group fall short of listing requirements on the information disclosure. Now, as you had pointed out, the IPO was supposed to take place both in Shanghai as well as Hong Kong on Thursday, but now it is not going to happen for an undisclosed period of time.
This is a very simple question to answer, as most people know him through different social media platforms. He is a social media influencer, as many people obey him with his brave life story that pushed him to a level that he never expected. According to estimates, he is the fifth wealthiest person in China, with a net worth of $34.1 billion. Ma is mostly known as the co-founder and the former executive chairman of the Alibaba Group. In 2017, he was ranked second on the list of the world's 50 greatest leaders by Fortune. He completed his undergraduate education at the Hangzhou Normal University and later became an English teacher as well as an international trade lecturer. Having been rejected from many jobs, no one would have suspected that Ma was on the path to becoming a notable figure in the tech industry. However, his unwavering determination helped him to reach the level where he is now. He started his first e-commerce business back in 1994, and step by step, and with the help of his colleagues, he finally founded Alibaba in 1999. Being the executive chairman of the company, he looked after the company personally until his retirement from the Alibaba Group in 2018. Alibaba raised over $25 billion through an IPO in the New York Stock Exchange back in 2014. His next plan was to merge Alibaba and its subsidiaries under the umbrella of Ant Group through an IPO scheduled to list in 2020. However, it failed due to the dispute between Jack Ma and China's Communist administration. After that, he suddenly disappeared from the world. But the story continues. He was virtually non-existent for a few months following October 2020. But he was seen again for the first time on January 20th, 2021 during a charitable event organized for rural teachers. In a few more rare instances, he was spotted doing things like golfing and sailing, mostly non-business related matters. Despite his absence in financial matters, the Chinese government put more pressure on the Alibaba Group by ordering them to sell the media-related businesses like Hong Kong's South China Morning Post with the aim of regulating the influence of this giant e-commerce conglomerate. The Chinese government decided to stand against the businessman in December of last year, opening an antitrust investigation into the online trading platform Alibaba and its mother company, Ant Group. Before that, Jack Ma had made a public statement describing the Chinese banks as being like pawn shops. Most analysts point to this as the closest reason for the sudden rise of Chinese authorities against the wealthiest businessman in China. In addition to labeling the global banking Basel Accords as an old people's club, he pointed out that systemic risk is not the issue in China. Rather, China's biggest risk is that it lacks a financial ecosystem. Ma stated, Chinese banks are like pawn shops, where collateral and guarantees are the hard currencies. As a result, some decided to go so big they are not allowed to fail. As the Chinese like to say, if you borrow 100,000 yuan from the bank, you are a bit scared. If you borrow 1,000,000 yuan, both you and the bank are a little nervous. But if you take a 1 billion yuan loan, you are not scared at all. The bank is. These controversial statements were made by Jack Ma at the Bund Summit in Shanghai in the presence of giants of the financial sector like Zhou Xiaochuan, former governor of the People's Bank of China, and Yi Gang, the current governor of the People's Bank of China. His fiery speech was like a spark which ignited the whole finance sector. If we examine Jack Ma's statement more closely, he just wanted to point out a weakness of the traditional banking system in adapting to the financial requirements of the future world. He highlighted the use of technology to build a credit system based on big data rather than on the current mortgage lending system. Then borrowers will have their own limits to avoid taking excessive loans and mortgaging their assets. But the opinion of economic experts about Jack Ma's criticism regarding the banking system is divided. One set of experts praise this as a bold statement, while others criticize this as a totally useless statement due to the lack of proper understanding of China's financial system. On one hand, this criticism of Jack Ma's statement is correct, as the International Monetary Fund, or IMF, reported that China is the country with the world's largest bank system, the second largest equity market, and the third largest bond market. So the power of this financial market shouldn't be underestimated through a comparison between the target clients of traditional markets and fintech companies. Target clients for the former lending facilities are different from fintech companies that offer microloans. We're not going to take a side on this argument in this video. We just want to know how this affects the status of Jack Ma. Balancing innovation and regulation is one of the current major issues faced by countries like China and Singapore. Singapore handled the situation in a handy manner by introducing a fintech regulatory sandbox with the aim of allowing the fintech companies to test innovative financial products or services in live environments in a defined scope and time frame. However, the Chinese market is much more complicated than Singapore, and it's difficult to allow such freedom in finance-related innovations. For example, with the introduction of digital RMB for testing purposes, many fake digital RMB wallets started to appear on the market, damaging the balance of the financial system. The once famous P2P internet loan system in China also collapsed, affecting many people. Regulating financial services is a much more complicated task in China, with the trend chasers and fakes that follow. If it is allowed to digitize the market, there will be no turning back for the government in bringing its negative impacts to the financial system. This can be identified as one reason for the sudden movement of the Communist administration against Jack Ma. A few days after this controversial speech, Ma's Ant Group had planned to list the mother company in Shanghai and Hong Kong. Financial watchdogs approached Ma within less than 1 week and dressed him down. The Beijing administration decided to suspend the Ant Group's listing on the starboard of the Shanghai Stock Exchange as well as the Hong Kong IPO. If that IPO had not been banned, it had the potential to raise at least $34.5 billion in an IPO that attracted more than $3 trillion of retail orders. However, the ban on the Alibaba listing resulted in a slide in Alibaba stocks in the New York market during that period. China's communist government also came up with new draft rules for online microlending, stipulating stricter capital requirements and operational rules for some of Ant Group companies' consumer credit businesses with the intention of slowing down the operational frequency of these fintech giants. Before we proceed, hit the subscribe button and smash the bell icon for more exciting updates. So, it's totally clear that the Chinese government imposed bans on Jack Ma out of fear that Ant Group could control a major proportion of the Chinese financial sector. Jack Ma has already given up the fight for his rights in Ant Group. Under the regulations introduced by the Chinese company, he holds only 6% of the voting rights of the company, despite being the co-founder and long-serving executive president of the company. A spokesman from the Ant Group recently confirmed the news, and now the company has been transformed into a structure where no shareholder holds ownership of the company. No shareholder, alone or jointly with other parties, will have control over Ant Group. The adjustment is being implemented to further enhance the stability of our corporate structure and sustainability of our long-term development, the Ant statement said. Initially, Ma held more than 53.46% of Ant's shares, and he was the control person of the company, as none of the other shareholders had a voting right to challenge his supremacy. But the present structure divided the voting rights among 10 individuals, including the founder, management, and staff, and they would exercise their voting rights independently. This only affects voting rights, not the economic interest of any shareholder. The Chinese government decided to continue the initial IPO of the Ant Group, which was suspended in 2020 and without the former supremacy of Jack Ma within the company. However, this time the IPO didn't get the same interest as it was initially scheduled under Jack Ma's leadership. If this IPO had happened in 2020 as it was scheduled, it would have been a world record listing at that time. With the regulations introduced by the Chinese officials, Alibaba Group must run under certain limitations. But it has been observed recently that authorities are now loosening the regulations to continue their operations with more freedom. Recently, Ant Group was allowed to raise 10.5 billion yuan for their consumers arm. Jack Ma is not showing any interest in businesses after his failed IPO in 2020. He was observed mostly in charity works or occasional overseas journeys. Recently, he was seen in Thailand, as reported by Bloomberg. With the smaller percentage of shares owned by Ma, it's difficult to predict a comeback of the old English teacher into the Ant Group, playing a more leading role in the company. What do you think about Jack Ma's future? Share your thoughts in the comments section below. Thank you very much for watching the video. If you enjoyed the video, subscribe to the channel to get more exciting economic facts. See you guys in the next video. Goodbye.